Here's the reason why 90% of prop firm traders fail their challenges, and it's probably not what you think. Most people will tell you that it's because the drawdown limits are too tight, or because of the trailing drawdown is unfair, or that prop firms are setting you up to fail. That's what everyone says. Every time you go on Twitter or Reddit, someone's complaining about Topstep or Apex, how they moved the goalposts, changed the rules. But let's be honest, that's not it. That's not why you're failing. Look, I've been through this myself. I've blown accounts. I've sat there staring at my trade of 8 P&L thinking, how did I mess this up again? And after doing that for a while, I realized the problem wasn't the prop firms. It wasn't the rules. The problem was me. And if you keep blowing evaluation accounts, it's probably you too. And today I'm going to show you exactly how to fix it. So let's talk about why most traders fail. And I'm not talking about some abstract statistic. I mean the actual reasons why you actually fail. Click that reset button, then 2 weeks later, you're back to square one, buying another account. Reason number one, overtrading. You passed the evaluation, you're feeling good, you got funded, and then you start taking trades because you're greedy, because you're bored, because you're trying to get money and you're trying to trade under pressure, or you're trying to speed run the consistency rule so you can get your first payout. I've done this. You're watching the NQ on the 5 minute, you see a little pullback and you think, I can grab a quick 10 points here. Next thing you know, you've taken 5 trades in a session that weren't even part of your plan. Reason number two, revenge trading. This is the big one. You take a loss, fine, it happens, cool. But then your ego kicks in. You size up on the next trade to try and make it back. And when that one loses too, now you're really in trouble. I've seen traders blow a whole 50k evaluation in 20 minutes because of one loss that they couldn't get over. And reason number three, the one nobody talks about, is simply not reading the rules properly. You'll be surprised how many people fail because they didn't realize there's a consistency rule, or that they traded during CPI or FOMC when the firms restrict news trading. In fact, I've got a whole video that goes deeply into this topic about prop firm rules and how to avoid losing accounts because you broke one of the rules. So that's something you should definitely check out. All three of those reasons, they all come back to one thing. Let's be honest, most people who are buying Topstep or Apex or take profit trader evaluations already have a strategy. You know how to enter a trade, you know support and resistance, you know whatever system you're using, whether it's ICT, smart money, or orb, fair value gaps, whatever you're using, the strategy is rarely the problem. The problem is what happens between your ears the moment you've got real contracts on the line and that drawdown is creeping up behind you. The problem is you can't control when you're down $600 on the session. The problem is you take a trade that isn't your setup because the NQ is moving, you're impatient. The problem is you move your stop loss because you're scared of being wrong. The problem is you. I'm sorry, but that's the reality. And this right here is what separates people who get funded and actually take payouts from those who keep buying combine after combine, evaluation after evaluation, prop account after prop account every single month. So before I move forward, I just want to say one thing. If there's one thing you're going to take from this video, please control your losses whenever you're trading. This is the most important thing you can do. It is risk management. Let me tell you something right now. When you're trading, you have no control over what the market's going to do. The market will do what it does regardless of what analysis you did. The only thing you can control in trading is how much you lose. So risk management is very important. In fact, I think it's the most important thing when it comes to trading. I'm telling you, learn to control your risk and you will become profitable. So let me tell you about an account I blew. I want to say this was maybe 2 years ago. I bought a 50k combine. This was with Topstep. I think it cost me like $49 on a sale or something. Anyway, I was trading the NQ futures. I had a strategy that worked. I back tested it, forward tested it. Everything looked good. First few sessions, I was up. I think I was up about $1,500 on the combine. I was feeling good. I was thinking, yo, this is easy. I'm going to pass this thing in like a week. And then I had one losing trade. just one. It was about, what, a $400 loss or something, like a 20 points loss. And guess what? Instead of just accepting the loss and moving on, I got annoyed. I thought, you know what? Let me just take one more trade to get that $400 back. That's the worst thing you can do. The next trade, lost two. Now I'm down $800 in one session. And this is where the spiral started. I sized up, went from 2 minutes to 5 minutes, took taking bigger trades, took a trade that wasn't even part of my setup. The NQ reversed, and next thing I knew, I was down over $200,000 in one session, and my account was breached, combined over, just like that. Looking back, it wasn't the market that beat me. It wasn't Topstep's daily loss limit. It was me. I couldn't accept a $400 loss and end up blowing my account. And here's the thing. If you can learn to just accept losses when trading, really accept them, like genuinely be okay with losing $300 or $400 on a trade, come back the next day because you know your system will win over time. It's a game of probability. That will change everything, I'm telling you. Okay, so now let's get into what actually works. So this comes down to three main things, and if you do them, it will completely change your prop firm results. Step one, predefine your max daily loss and stick to it like your life depends on it. Here's personally what I do. If I'm trading the NQ futures on a 50k combine, every single day before I open the charts, I decide what my max loss for that session is. If the evaluation has a $2,000 end of day drawdown, then I'm not letting one bad day get anywhere near that. I risk about $300 to $400 per trade. And if my daily loss limit is 800, that's it. I stick to 800. If I lose and I get to 800 in the day, I'm done. Charts closed. I don't care what happens. If the NQ has a perfect setup after that, I'm not trading. I'll come back the next day and trade again. Most traders don't do this. They have no daily limit. So one bad morning where the NQ whipsaws turns into a blown account by lunchtime. This one rule alone will save half the traders who fail. Step two, I risk the same dollar amount on every single trade. So I personally use the ATR to define my stop loss. I've got a video where I go over this in detail. But basically, according to what the ATR is giving me, I will adjust my stop loss and I will adjust the contract sizes. So I make sure I'm risking the same dollar amount every single trade, which is usually between $300 and $400 per trade. That's it. I'm not trading by contract sizes. I'm trading by dollar amount. That keeps my loss consistent. Step three, walk away after you enter. This is a very important rule. For me, this is the one that saves my psychology when trading. Once I set my stop loss and my take profit, I set an alert on both levels and I walk away. I shut down my laptop. I go about my day. I find something else to do. I don't sit there and start watching every tick. You know why? What happens when you watch every trade? You start getting ideas. Maybe I should close early. Oh, it's coming back on me. Maybe if I move my stop loss down a bit. No, set a take profit, set your stop loss, set alerts and leave it. The market will do what the market does. You don't need to watch it happen. Now, let me actually show you what this looks like in practice, because I don't just want to be one of those videos where I just tell you theory and you walk away with nothing. So look on this evaluation right here. You can see the losses. Minus 205, minus 168, minus 274, minus 147. 4 losses in a row on the Nasdaq. Most traders at this point would have blown the combine. They'll be revenge trading, sizing up 5 or 10 minis, doing whatever, doing all the wrong things. But look what happened next. One winning trade, the NQ ran 50 points in my direction and I recovered all 4 losses. This put me in profit in one session, one trade. Why? Because I kept the losses small. I stayed consistent with my position sizing. If I had oversized on that third loss trying to revenge trade, that one winner wouldn't have saved me. I would have probably blown my account. So this is why it's good to keep your losses consistent, keep them small, keep them consistent. So if there's one thing I want you to take away from this video, it's this. Stop thinking about prop firm accounts as a trading problem. It's a risk management game. The prop firm doesn't care what strategy you use. They don't care if you trade supply and demand or ICT or the orb or fair value gaps or whatever. They care about one thing. Can you follow their rules, not lose too much money before you hit the consistency target? That's it. That's the game. Trailing drawdown is the game. The daily loss limit is the game. And once you start treating it like a game where the rules are rules and your job is to stay within them bounds, everything gets simpler. You don't need a better strategy. All these steps I just gave you right here is enough to make you consistent. I'm telling you, daily loss limit you set for yourself, consistent position sizing based on dollar value, walking away after you enter a trade. Just those three things alone will massively improve your results. Now, of course, it's not going to be like this all the time. You still will have losing sessions. You're going to have moments where you want to break your own rules. I still have those moments every single day. But guess what? It's about being consistent. It's about being disciplined. The difference is now I catch myself before I click that buy or sell button. I ask myself, am I taking this trade because it's actually part of my setup? Or am I taking it because I'm bored, because of FOMO, because I'm angry and I'm trying to revenge trade? That 5-minute pause to ask yourself that question, that's the difference between getting funded and taking payouts versus buying another account next week because you've blown this one. So that's basically how it works. That's the real reason why most traders fill prop firm accounts. And this is exactly what you need to do to not be one of them. Like, subscribe, and I'll see you on the next video. If you have any questions about trading the Nasdaq futures, prop firms, leave it in the description. I will answer everyone. Peace.